Rally in U.S. stocks evaporates as White House doubles down on China tariffs. What was a massive rally on Wall Street turned into yet another sizable decline. Markets surged Tuesday morning in anticipation of signs of a trade negotiation and cheap stocks. But that relief rally evaporated when the White House announced that it would impose significant tariffs on China. In the afternoon, U.S. stocks fell hard into the red. The Dow lost 0.84%, or 320 points. The broader S&P 500 fell 1.57%. 2.15% fell for the tech-heavy Nasdaq composite. The S&P 500 finished the day at its lowest point in nearly a year. Both the Nasdaq and the Dow ended the day at their lowest levels since January 2024. According to an announcement made by White House Press Secretary Caroline Leavitt on Tuesday, President Donald Trump will levy an additional 84% in levies on all Chinese imports on Wednesday. This will result in a decline in markets. As a result, all goods imported from the nation will be subject to a tariff of at least 104%. The S&P 500 and Nasdaq, which had surged as much as 4% and 4.5%, respectively, Tuesday morning, tumbled midday as Leavitt spoke to reporters. The loss for the Dow comes after the blue-chip index surged as much as 3.85% on Tuesday morning. The S&P 500 briefly entered bear market territory at its lowest point of the day, falling 20% from its record high in February, before pulling back and closing down 18.9% from that peak. It's the second day in a row the S&P 500 has flirted with bear territory. Meanwhile, the Nasdaq, firmly in a bear market since Friday, closed down 24.3% from its record high in December. The Dow closed down 16.4% from its record high in December. We're not anywhere out of the woods yet, and so that sort of tempers things, said Thomas Martin, senior portfolio manager at Global Investments. After soaring to historic levels over the previous two sessions, Wall Street's fear gauge, the VIX index, surged higher on Tuesday, indicating jitters among traders. Extreme fear was the sentiment driving markets. According to CNN's Fear and Greed Index, a rally was on the way for Wall Street. Wall Street investors were looking for any reason to catch their breath before the planned midnight escalation of tariffs after markets plunged. However, Trump's hefty tariffs on China served as a reminder that reprieves can be fleeting, as Wall Street became increasingly concerned that Trump's tariff policy would send the U.S. and global economies into a recession. Stock prices suffered severely over the past few days. Investors appeared to be looking for buying opportunities after 3 days of market chaos. One measure of the price-to-earnings ratio of S&P 500 companies closed below 17 Monday, historically cheap, giving investors a chance to scoop up stocks they believe might be oversold. This is a very normal action and very technical in nature. After a shock period, said Truist's Keith Lerner, markets don't move in a straight line, and the market is oversold. Lerner noted that historic market rebounds tend to be clustered in with massive declines, as investors with FOMO worry they could miss out on a rally. In a period of uncertainty, each bit of new information is over-extrapolated, which leads to wider than normal swings, Lerner added. That explains why a bit of fake news Monday that Trump was considering a tariffs pause, immediately batted down by the White House, sent stocks temporarily surging. That gave markets a taste for what could happen if some nations begin to make progress in negotiating lower tariffs. Yesterday market players saw how the hint of good news in that case. It was chatter about a pause in the Liberation Day tariffs could rally markets by whole percentage points very quickly, Michael Block of 7 Capital said in a note to investors. Even though that proved to be all smoke, traders are now poised for the fire that is real news. Markets were coiled for a rebound. Investors have been on edge for any updates from the White House that might signal Trump is negotiating his trade policy. White House National Economic Council Director Kevin Hassett said Tuesday on Fox News that the administration is managing a massive number of requests for negotiations from nations and that Trump is prioritizing two of our closest allies and trading partners, Japan and South Korea. Earlier on Tuesday, Trump posted on social media that he had a great call with the acting president of South Korea. On Monday, Trump spoke with Japan's Prime Minister Shigeru Ishiba, who will be sending a team to visit Washington to negotiate a trade deal. Traders are peeking around every corner looking for even the slightest whiff of a trade deal or movement on the tariff front, said Jamie Cox, managing director at Harris Financial Group. The market is wound up for a face-ripping rally. Across the Atlantic, the European Union's executive arm said the bloc is prepared to negotiate with the United States overbuying more of its liquefied natural gas. It's a response to a grievance raised Trump, who has said the EU must buy around $350 billion worth of American LNG to compensate for the deficit. The U.S. has in goods trade with the bloc. U.S. Trade Representative Jamieson Greer said Tuesday during a routine hearing before the Senate Finance Committee that the administration is in talks with about 50 countries, and that they're trying to address some non-tariff related measures, such as foreign countries' regulations that impede U.S. exports. Greer reiterated that the massive reciprocal tariffs imposed by Trump will take effect on Wednesday. He stated, "We will implement the president's plan, and we are coupling that with immediate negotiations with our partners." High-stakes game of chicken. Markets tried to rebound Tuesday before sliding. It's a reminder that there's no guarantee stocks will remain buoyant after imposing across the board 10% tariffs on virtually all products coming into the United States Saturday. The Trump administration is set to impose significantly steeper levies still on dozens of countries. Those tariffs, which Trump has called reciprocal, although they are no such thing, amount to as much as 50% for a handful of countries. China's Commerce Ministry declared on Tuesday that the nation would continue to oppose Trump and would fight to the end of the trade war. A high-stakes chicken game is developing as the trade war between the two largest economies escalates. China has squashed deals that Trump wants, including a U.S. company taking control of ports on both sides of the Panama Canal, and a deal to sell TikTok to a U.S.-based company. Both countries' economies would be hurt in a trade war, and given the massive trade imbalance with the United States, China could very well be hurt worse. So investors hopeful for a deal may not get one. Additionally, if they do not, a damaging trade war could devastate both economies and markets simultaneously. Fears of a recession. Any escalation of the trade war would probably lead to a U.S. and global recession this year. Multiple Wall Street banks have said over the course of the past week, including Goldman Sachs and J.P. Morgan Chase, that could continue to sap demand for stocks. Although the current bounce back may be short-lived, some in the Trump administration were already declaring victory. It's finding the bottom now. It's finding the bottom now, Trump's top trade advisor, Peter Navarro, said about the market Monday evening on Fox News. It's going to shift over, and it's going to be companies in the S&P 500. Who are the first to produce here? Those are the ones going to lead to recovery. And it will take place. Dow 50,000. That and no recession are guaranteed by me. Navarro's optimism wasn't matched by J.P. Morgan Chase CEO Jamie Dimon, who warned in his annual letter to shareholders Monday that Trump's tariffs would raise prices, slow the global economy, and weaken America's standing in the world by tearing up its alliances. Even some of Trump's allies, including Elon Musk and Bill Ackman, have recently warned that tariffs are bad policy that rely on extremely flawed logic.